time to time. All right, got it. You're being recorded. So there's certain things that we've identified that affect electrical contractors. But first, what I'd like to do is I'd like to introduce my team here. I'm Peter Stoll Jr., better known as Old Pete around here now because I have the gray hair. There's young Peter, Pete Stoll III here, Andrew Stoll, and Eric Stoll here. Mary couldn't make it with us this morning, but I know a lot of you know my sister Mary from the various NECA meetings. So what we wanted to go over today was some of the things that are changing in the insurance industry and things to watch out for in your insurance program. So without further ado, let me go to the next slide. All right, electronic data liability. So some wonderful people in the insurance industry decided several years ago that loss of electronic data is now excluded from a standard commercial general liability policy. So this is limited to the loss of data itself. The most common type of claim that we see is where a contractor has accidentally damaged some type of utility line, underground hit, that type of thing. The physical damage to the utility line is still covered. However, the loss of data claim is no longer covered by a regular general liability policy. There is a buyback endorsement called an electronic data liability endorsement that can be added to your CGL policy. The endorsement will provide you coverage for not only the loss of data of some third parties claim, but also the physical damage to their property. So this one is focused on the loss of data. The next slide is going to be cyber liability, which is more exposing data to the public that's not supposed to be exposed. So for that slide, Pete.
Sure. So cyber liability is still a kind of a new policy in that there's not a standard form across all of the various carriers that do it. So this is just kind of like a general overview of what cyber liability does. Obviously, the cyber attacks are becoming more common. You know, even like the State Department has gotten hacked, but there's been a variety of contractors and construction companies that have been affected. One of the more famous ones is when the Target stores were hacked via their HVAC system.
It's a building monitoring and control system. HVAC is part of it, but it does energy monitoring and that type of stuff. And that system was hacked by a hacker.
So what cyber liability is supposed to do is to provide coverage for if you are hacked and expose people's payment data, things like that, or identification data. And then also if you're working on site and one of your projects ends up resulting on or some data being exposed, such as like at a university or anything like that. The cyber liability policies, they exclude data loss from physical damage, which is what the electronic data liability is supposed to cover. So this kind of fills in the gaps from that and the CGL to protect all of the various sources of data loss or data exposure that you may run into.
Thank you, Pete.
The next slide here is employment practices liability. In today's society, any employer can get sued for any type of discrimination. You see it all the time with, the Matt Lauers of the world, or any type of, failure to hire, wrongful termination, any type of discrimination. One of the ones that we've seen more recently is employees being laid off due to COVID and then not being brought back on. This type of policy typically provides coverage for that. It'll give you representation and then also pay out whatever settlement might come out of this type of claim.
You know, the other thing that we see with employment practices claims is there may be circumstances sometimes where an employee is out on workers' compensation and that employee may not want to be, or the employer may not want to reoffer that person a position after their claim is closed out because of a contentious relationship or whatever the case may be. The EPLI insurance is important that you have that coverage, because if that injured worker comes back and sues his employer under ADA saying, I wasn't rehired because of my injury, this is the type of policy that's going to pay for that. Your regular general liability policy won't. So again, this is focusing on what the gaps are that you can look at to fill the potential gaps that you have in an insurance program. All right, this is a new one. Of course, the industry loves to add new ones. The communicable disease exclusion. We're starting to see several liability carriers add this to their CGL policy forms. The communicable disease exclusion would exclude coverage or defense for any lawsuit filed against your business for spreading any communicable disease at a project site or elsewhere. This leaves the possibility for a potential lawsuit if one of your employees or subcontractors, knowing or not, spreads the COVID-19 virus to other workers or the general public. As this progresses, the pandemic, we're seeing more and more carriers do this. It is not the entire industry. There are still plenty of carriers who will give you the coverage for communicable diseases. The standard CGL policy form already includes coverage for spreading diseases. The carrier would have to actively put in a separate exclusion onto your policy for that. This one's very broad. It's not just limited to COVID, it's any communicable disease. So for example, HVAC contractors were always concerned about the Legionnaire's disease, those types of things that can be spread throughout a building or elsewhere. But this is a big one that we're starting to see more, and it's something that you should watch out for and push back on if somebody is asking you to accept this. There still are carriers that are willing to provide this coverage, but like I said, we're starting to see carriers try and add this on a fairly common basis. All right, international shipping exposures. So a lot of clients have to purchase specialized equipment that they purchased from an overseas manufacturer. We particularly see this with people that do work for large manufacturing or pharmaceutical industry projects. So here you are, you have this piece of specialized equipment that's in Germany or Japan or whatever the case may be, and it's being shipped to you at your risk. It's under your contract, and you need to obviously install the piece of machinery at the project site. Most of your installation floater policies, which I would gather most of you carry, typically will only cover such equipment once it's in the US or Canada. So we're all a global economy now. You ought to take a look at your installation floaters. If it is limited to just US or Canada equipment while it's being delivered or installed on a project site in the US, that's fine. But if you are getting large pieces of machinery, I mean, some of these things cost millions of dollars, you can buy an international shipping policy, which will cover the equipment while it's still outside of the country. Again, you got to read the terms and conditions of your contracts. And when you're dealing with a manufacturer, you have to deal with whatever their shipping policy is. You might have to insure such thing. Not a real expensive item, but boy, if you had something that was overseas, destroyed in transit, by the time it got to the US and your current carrier didn't cover you for that, I'm sure that's something that would be upsetting to a number of you. Okay, OCCCSIP and CCCSIP projects have been very popular on large projects. Contractors who enroll in such programs should check their own insurance policies for coverage for once the OCCCSIP or CCCSIP has expired. That is I should back up. Owner-controlled insurance programs and contractor-controlled insurance programs, where the insurance coverage is being purchased for a specific project, either by the project owner or the general contractor. So once you're enrolled in that, you really should check to see if your own policy will cover you once the OCCCSIP or CCCSIP policy has expired. Claims can come in many, many years after a project is completed. And if that OCCCSIP or CCCSIP policy is no longer in effect, you are going to be relying on your own insurance coverage for whatever that claim may be. Many insurers include a total CCCSIP and OCCCSIP exclusion, regardless if the program is expired or not. You can purchase coverage under your own policy for expired CCCSIP and OCCCSIP projects. It's something that you have to check on to see whether it's included in your program or not. Obviously, the more of these types of programs, these types of projects that you're involved in, it's more and more of a concern based on the number of projects that you have put on these or are covered under these types of programs. Also, for larger firms with a lot of net worth, yes, I know the OCCCSIP and CCCSIP sometimes carry 50, 100, $150 million of coverage. You're relying on someone else to provide the coverage under that program. And you're probably paying a lot for your own insurance program. excess OC and CIP coverage can be provided under your own insurance program. So you should ask about it. That way you're relying on your own insurance coverage in case something happens with that program, whether it gets canceled or whatever the case may be, or the limits aren't sufficient. We did run into a case one time where the OCCCSIP project only had $25 million in coverage on it, and a claim occurred that exceeded those policy limits. Those contractors had to go back to their own insurance program for that. The last comment about the OCCCSIP and CCCSIP is the deduct amount that the enrolled contractors are asked to give as a reduction from their contract price. We're starting to see some of the OCCCSIP and CCCSIP managers add a markup percentage to your reported rates. They'll add 10, 15% and call it profit and overhead on your insurance markup. I don't see how that's fair to you as the trade contractor that's being enrolled in that program. The rates that you report are the rates that should be used to calculate your deduct. And then lastly, of course, when your own policies are being audited, you should make sure that your payroll for those projects is removed during your physical policy payroll audit. The dumbest thing that can happen is that you're enrolled in an OCCCSIP and CCCSIP. That means the owner is paying for the insurance. And then if you don't get this deduct on your when your payrolls are audited, that means you're paying for it too. So now we've fed the insurance industry twice for the same exposure. So please just make sure your payroll audits are accurate in deducting the payrolls for these types of projects. All right, so those of you who are in captive insurance programs, everything that we just talked about applies to them as well. Your captive program generally includes your general liability, your auto, and your workers' compensation. And even these captive insurance programs have policy terms and conditions, just like every other insurer. So even if you are with a captive program, each of the coverage issues that we're discussing today should be reviewed to see if it's properly protected under the captive, or if the captive's program can be amended for your particular need. The OCCCSIP one's a big one that we see. They usually exclude anything that's underneath that forever and ever. No excess coverage. And there's some other things. A lot of them don't include the electronic data liability. Nevertheless, so don't just assume because you're in a captive insurance program, these don't apply to you. These apply to anyone who's insured, who purchases insurance for an electrical firm. All right, coverage for defective work. Replacement of your own defective work is not covered under the industry standard CGL policy. You know, that would be an insurance company insuring your own defective work. Effectively would be a guarantor instead of an insurer. There is no guarantee of your work built into a liability policy. However, several insurers are offering contractors' errors and omission liability coverage for certain trade contractors. Electrical contractors can readily find this coverage. Coverage for replacement of your defective work. It's not a cheap policy, but it is something that you want to consider. The claims that we typically see these types of coverage claims for seem to deal more with condominium or multifamily housing projects. Once the project is completed, either the condo associations or the housing association gets together, they hire an attorney, they go and sue every contractor on the project site claiming that their condominium building is not built properly, or they have defective work and they want this replaced and that replaced. Replacement of your own work is not going to be covered under your CGL policy. So for people that have more of an exposure to these types of high risk defective work litigation scenarios with condominiums or multifamily housing projects, we would recommend that individual trades such as electrical contractors get this type of coverage if you're exposed to that. All right, next one is construction class credit. Eric Stoll is going to take this one.
Yep, so our next two slides are going to be discussing how you can save on your workers' comp premiums. First is the construction class credit. What you'll need is it's basically a form where you'll fill in your third quarter payrolls for a certain year and the amount of hours worked. So I think it's a little over $40 per hour for your employees. You'll be in a percentage bracket up to 30% where it can be applied to your workers' compensation premium. It's a nice chunk of savings, and it's an application that you'll have to complete every year, but it's a pretty simple form.
This one's been around for years, guys. And we're surprised that when we run into, particularly with the construction firm that isn't aware that potentially 30% of their workers' comp premium can be returned to them if they go and apply to the state to get this construction class credit. New Jersey has different rules. You're going to go into that.
Yeah. So New Jersey, you'll have to submit it each year 5 months before your renewal date, whereas Pennsylvania and Delaware, you can submit it anytime during the policy term, even after the policy is expired to roll back onto it, or leading into your upcoming renewal.
Typically, we like to see this done in advance of the renewal or whatever the date is, so that you have an upfront idea of how much this credit's going to be available to you. But Eric's right. When you're at $40 an hour, just the wage portion and higher, you're going to be qualifying for probably the full 30% credit, or in New Jersey, the 25% credit.
Next slide is going over the safety committee program that you can have established. It takes a little time to get the committee established, almost a whole year, and the application process for the first year is pretty lengthy. It's about a 35-page application. Yeah. You get it once established, though, you'll have like a monthly meeting with some of the employees that are out in the day-to-day field operations and go over any potential safety issues that they're seeing on site. After the first year, it's just a pretty simple renewal application to apply for each year, where you can continue to get that 5% credit. And then, once people have that safety mindset all set in, I can help reduce losses and help keep your EMR at a pretty low number.
Yeah, a couple of things on the credit, these two credits, the construction class credit and the safety committee credit, are both published with your EMR factor. So a public owner or somebody that's looking at your EMR data that's available online will also see the safety committee credit. So if they're looking at two contractors and they see, hey, one has a safety committee and the other one doesn't, that might affect their judgment, regardless of what you're actually doing. I know this is paperwork. Some of the captive programs will not give you the 5% premium discount for having the certified safety committee or the credit under the construction class credit. But regardless, you should still go through the process of getting these so that the public data that's available for your firm is putting your best foot forward. Having a safety committee credit listed with that EMR data when it's published, I think showing your company in its best light. You're probably doing all of the things required for the safety committee already. Yes, admittedly, the first year application is very difficult and a pain to go through, but after it's in effect, it's a pretty easy process to keep it in effect. So again, we recommend that you do this regardless of who your insurance company is. Now, it looks like I might have a question here on the chat. All right, from Gerald. Can you only utilize either the construction class credit or safety committee credit, or do you, or could you do both and get both credits? And the answer is yes, you can get both of these credits. So you're paying over $40 an hour, you can get the 30% credit. If you go through the process of getting your safety committee certified, you will also get a 5% credit for that. These are separate programs that can be qualified for separately. If I'm not mistaken, I think that's the end of our show, folks. I would like to open it up for any questions.
If anyone has any questions, please feel free to unmute and ask your question. If you're not comfortable doing that, by all means, you can certainly use the chat function on the Zoom. Pete, I have a quick question. Where can you find those contractor forms for the safety credit or the construction class credit? Are they on state websites, or do you get that through your agency, your insurance agency?
They can certainly get it through us. We'd send it to anybody who requested it. You can also get it from the state. Of course, they have their own websites. The safety committee credit is actually on the Department of Labor's website for the state of Pennsylvania. The construction class credit, I believe, is on the Pennsylvania Compensation Rating Bureau's website, is where you can get the forms for each one of those credits.
Also,
Thank
in
you.
the section of the policy, a lot of the carriers have that
That's
credit
true.
form in there too.
Yeah.
So if you were to dig through your workers' comp policy now, there's a possibility that the form might already be in your workers' comp section of your of your policy.
I have a comment. First, Jay, you really put together an important topic, and I'm an attorney. I refer all my clients to the Stoll agency for bonding, which they haven't talked about. I didn't expect them to, and insurance, because as you could tell, they are really current and up to date on endorsements that are available in the industry. So I'd like to thank you folks for this presentation. I really learned a lot today about endorsements that are available that I didn't think were available and that are really helpful. Is it your practice generally to inform clients of the availability of these endorsements?
Henry, every industry has its own little idiosyncrasies, and what we try and do, well, obviously we specialize in construction risk with the bonds and the insurance. So electrical contractors have certain ones that we put in our standard specification that we request from the insurance companies. We do try and explain the differences and the benefits of what we're providing and the cost of each one of these items so that they can make an informed choice themselves as it's, if it's worthwhile for them to pursue it or not. But yeah, each industry has its own little idiosyncrasies. The ones we identified today are more geared towards the electrical contractors. I wouldn't recommend an electronic data process or electronic data liability to a painting contractor. I would say that's a little bit of a very small exposure for them, and probably money spent, better in their pocket than an insurance company's pocket for that one. But that's one of a number of examples of different types of things that we look at based on the individual trade or the client's, individual circumstances. And thank you. I appreciate the compliment. Stoll Agency has done business with Henry Donner for decades, going back to my father.
Thank you, Henry. Are there any other questions for the Stoll Agency this morning? Hearing none, if anyone wasn't able to join us exactly on time this morning, please reach out to me. We did record this session today. I'm more than happy to share that with you. It'll also eventually be uploaded onto our chapter's website under the media tab. Personally, I would really like to thank the Stoll Agency for taking time out of their day to share this information with us and our members this morning. Like Henry, I learned a lot. I had no idea that these savings were actually available. I understand it takes a little legwork to fill out the paperwork and the forms, but it seems like it could be well worth the time investment to do so.
Yeah,
So,
Jay,
yes.
just one other comment. I'm sorry. I think we had a slide in there. It might have missed with the versions that we were trying to mess with this morning. Yes, Stoll Agency works for the clients. NECA assisted us last year with getting that construction class credit set up in the state of Delaware. There were certain electrical contractors that were not able to apply for that 30% credit in the state of Delaware. It affected the guys that did all the data cabling, telephone wiring, a bunch of the low voltage things. They didn't qualify for it in Delaware, but they did in Pennsylvania. So we got together with your government affairs unit at NECA and petitioned the Delaware State Workers' Compensation Board to get that corrected. It took about a year, but you guys backing us with this thing, obviously with the employers that are members of NECA, were able to get that completed. And so now those people in Delaware get the same discount that they would have in Pennsylvania or New Jersey. And again, thank you guys for your assistance, for assisting us. We're not an entity that the Compensation Rating Bureau would listen to, but an employer organization they do listen to.
Well,
Yeah, and I too, I want to thank the Stoll agency. They were great in that regard, in working with Aaron, our government affairs coordinator, and getting that done in Delaware. Really, thanks for your help, guys.
Thank you, Jeff. All right, guys, thanks again for the opportunity to let us show what we do to make our living here and try and help the rest of the membership grow their businesses safely.
Really appreciate you, Peter. Thank you so much for spending some time with us this morning. Everyone have a wonderful day.
Take care.
Thank you.
Thank
Thanks.
you. Thanks, guys.